Now, this is the belly of the curve, of course, and when we look at the belly, we can start to recognize some of these scalp opportunities. Whatever we're doing on the red line, we're doing the opposite, of course, on the price. So what we're looking for is we're looking for areas where the red line seems to stand out against everything else. So we can see a couple of those opportunities. So for example, the one that stands out to me that's pretty obvious would have been even this candle here, because neither of the lines move. Neither of the lines are at all moving at that stage. So there's an opportunity for me to do a bit of business here. So obviously that's simply a negative correlation. So the fact that bond prices rallied suggested that there was a sell opportunity on bonds there. This seems okay. This seems okay. I don't see much of an opportunity to deal here. Now, obviously, when this starts to go back to the upside, of course, we're looking at relative value here. So because we're looking at relative value, we're starting to think about the possibility of a sell. Well, you might be saying that would have lost money. It wouldn't have. It went from a price of 16 to a price of 11. I actually made 5 ticks on that sell. So you're wrong. It actually did make money. If you sold that, it made 5 ticks profit, which is a very, very nice scalp. Thank you very much. That's got a big pin attached to it. As we move forward again, of course, we can see that the red line is equal to the last red line, suggesting that there is still a sell coming in here. And again, you can see on this sell, you can see it went 20s. It only traded a low price of 17. So it was a scratch trade, probably realistically. The next trade seems quite obvious. You can see the red line is massively discounted against the orange line, massively discounted, and they're going in the opposite direction. So that makes life a lot easier for you to spot, doesn't it? So with the red line going in the opposite direction and the price, of course, at that point, that's a brilliant scalp, isn't it? That's a brilliant scalp. It's got liquidity, it's got price levels, it's got macro value ideas as well. It's got everything you could ever want. And it is a brilliant scalp sell, isn't it? So 23s traded a low price of 13s for a massive 10 tick scalp in 5 minutes. What a scalp. What a way to make a living, guys, scalping that type of business. As the price develops into those areas, not very much happens in here that would catch our attention. Of course, when the two lines start dropping on the spinner candle, you're automatically leaning on the idea of getting long into that trade. And obviously, that's not a difficult one to spot as another profitable trade outcome into the spinner. Maybe bidding 16s, traded a high price of 25 for 9 ticks. Another massive profit for a scalper. And then, of course, when it starts to drop, we can see a little bit of a change taking place. You can see actually the orange line drops and the red line rallies, suggesting that there's going to be a buy trade in here. Now, obviously, you're running down fast towards that liquidity, so that's a nice passive buy. Around about 14s, it traded a high price of 17, so it turned out to be a scratch, +1, and that's okay. Sometimes that's what happens, of course. Sometimes that's what happens. Into this area, you can see the red line is still premiumed against an orange line, which is completely flat. So you can see obviously that we've got an edge on the basis that we have now ran the stops. So that's a buy trade opportunity as a scalper. And it does go against you by a couple of ticks. It goes from 11s down to 9s. But as a scalper, you like when that happens. You like when that happens. Yep, this is the 5x4s and the 3x2s, Reeve, that we've done many times in the room. This is the 5x4s versus the 3x2s. You know, so it's like the 6x4s against the 5x4s. So it's an incredibly tight correlation. Yeah, incredibly tight correlation. So any value is a micro value, isn't it? Any value is a micro value. So obviously running into that as a storyline, it's a case of just buying up even more for your quick scalp into that. And it's a great little scalp. It goes from a low price of 9s and 10s up to 20s. A brilliant trade. So obviously since then, this is right, this is right. At the present moment, this is flat and the price is flat as well. So there's no real edge on a scalp at this stage. So no real opportunity. If it keeps flashing to the upside, of course, then of course the idea is that that should flash downside, but we're on the wrong side of that trade at the moment because the red line seems to be running a little bit hotter, which means we would rather be buying this than selling this. But because the slope is up, I don't want to do that trade just yet. I want to make sure if I'm going to buy it, these lines have to be pointing down on a down tick candle. So obviously that's all we're waiting for at the moment to get another scalp trade in here. So a whole entire day scalping on bonds worth probably scalp-wise about $1,000 per contract. It's not a bad way to make a living as a scalper. You know, we obviously focused a lot of our time last week on the likes of the S&P, scalping the S&P, almost entirely the S&P or the NASDAQ. But bonds are good for scalping. They're a big bang for your buck. I mean, you're picking up $30 every time you move one of those ticks. So a 3-tick move still giving you nearly $100. And that's pretty good. Now, the good thing about this trade is it dovetails beautifully in with the curve trade. So when we look at this trade versus the curve trade and we start considering those elements of the narrative, we can actually start to recognize some of the more important trade opportunities. So in other words, we can move along the line with this trade, and we can also incorporate this bit of business here, which is obviously looking at the 2s, 10s, 2s, 30s. In other words, looking at, for example, the tut spread along with the tub. So when we add this to the picture, it gives us maybe more of a global impact on the market space. It gives us a little bit more. But the idea, of course, is if you're buying the red line, you're selling bonds, and you can tie that storyline into the overall shape of the markets. You know, so obviously you can change these colors so that they're exactly the same, so that if you're buying red on one, you're buying red on the other, and it gives you the same trade setup. So when we look at that trade setup, we can obviously see the same thing happening over and over and over again. What we've got to do, of course, is to tie in the story. So when you see, for example, at the bottom edge of the 3 candles here, you can see a perfect example of a buy trade, for example, on bonds against the spreads, which simply doesn't show up on this chart here. Doesn't show up. So this is something that we want to make sure we try and tie together. If we can tie those 2 charts together and then have an outside market running just to allow us some knowledge, we could look at, for example, in the background, we could look at gold, we could look at the inflation break-evens, we could simply look at oil prices on their own, and we could look at the Japanese yen. And if they tie in with those trades, then of course the scalp gets a lot more credible, doesn't it? The scalp gets a lot more credible. And obviously that's what we are looking for, is we're looking for that credibility to start showing up. So obviously if you're selling the red line here, you're obviously wanting to do the same on the other chart. So what we could do is we could change this at 3x2s from a red to from an orange to a black line so that the tie-in is more obvious on the screens. Now, the interesting thing you'll find with these 2 pictures, Reeve, is that, which I think is really quite an interesting aspect of it, is that the value on the 2s, 10s, 2s, 30s will give you one side of the trade, and the value on the 5s, 10s will give you the other side of the trade. So in other words, if you're buying this side of the trade based on the 5s, 10s, you'll nearly always be selling the other side of the trade on the other spreads. So you'll be able to buy and sell all your way through this entire move. And that's because obviously one pushes and one pulls at each of the edges, So when one goes higher, the other goes and it changes. So yeah, it always pushes the other one, doesn't it? It pushes and pulls the other one. So whichever one moves first, the other one lags behind by a candle. And because it lags behind by a candle, that might result in a value sell opportunity after a buy trades came in. So when you're looking at it, you can actually start to recognize some of those elements. So for example, into this top edge up here, we had a lot of value to sell into that top line. We had a lot of value to work into that as a basic trade idea. And obviously, if we've got a lot of value to work into it as a basic trade idea, I don't think there's going to be anybody that's going to miss out on the opportunity to get short into that. And obviously then buying into the bottom edge from this chart made a lot of sense. So you get this idea that there's a lot of pieces to this jigsaw puzzle. You know, so when you're looking for those pieces, you can start to recognize that you're going to get one side giving you a crystal clear trade opportunity, and the other side is, yeah, not sure. And sometimes, like this sell trade up here, you've got both sides agreeing on the trade. You know, so you've got both sides 100% in agreement on this up here. You know, that was a no-brainer trade from both sides, and that was the 10.25 high price. You can check it for yourself. It was a brilliant trade opportunity to get that deal done. Brilliant trade opportunity to get that bit of business done. Remember, the idea is if you're buying the red, you're selling bonds. If you're buying the red line, you're selling bonds. When that trade sets up in unity with the other trade ideas, life gets very, very easy. So when you've got a macro valuation coming in, and if you look at that red line, was there ever any doubt that you were buying the red line at any stage? Well, look at the background to this as a macro trade. Look, so the black line's away up here, and the red line is away down here. Look, was there ever any doubt that this was a sell trade in bonds? So when you look at this from a 5s/10s perspective, and you look at the exact same trade from a full curve perspective, is there any doubts that that's a sell trade off the top edges? Any doubts at all? In other words, it's the same trade, right? It's the same trade, and that trade went 136.08 to 135.08 for $1,000. Just by recognizing that tie-in across the 2s, the 5s, the 10s, the storyline that's now going to drive the knob spread significantly going forward. One would imagine it's going to drive the knob spread. And your job, of course, is now to execute against that as a storyline. And whether the knob spread does eventually collapse into a puddle or not is obviously a different question. But you can see on this occasion, the knob spread did collapse into a puddle. So you can see the knob spread sold off beautifully as a flattener, just as you would have expected it to do. And obviously that gave you the idea that that was the perfect setup for that knob spread sell trade. And that's what we're looking for, isn't it? That's the storyline that we're looking for to tie in with everything else. So I loved it a lot. But again, you can obviously do this as a swing trader, or you can do this as a scalper. And obviously the idea there is that you tie the two pieces of the jigsaw together so that they agree with each other. So obviously looking at the bond at the moment, I wouldn't be against looking for bids at lower prices. I wouldn't be against that as a narrative. I wouldn't be against looking for that opportunity. And we can see that people are already starting to, consider the possibility of a bottom edge forming. You can see that there's a good bit of liquidity available there at 9s. The market's not terribly oversold, which is a bit of a pity, because that would make this trade a lot easier than it currently is, because at the moment it's exhausted. So there's no aggressive buy for me, that's for sure. But there might be a passive buy if we were to break through the 8s at the bottom edge. There might be an opportunity to bid into that exhausted long position. So my idea on this at the moment is to be passive on this. Wait to see if this breaks here, and if it does, recheck your value. And if the value is working out and we start seeing some sellers getting trapped in here, then a little buy side for the sweep back out of there would, in my opinion, make sense. But obviously this is important, because if the price drops through there and the value goes higher, then the trade's gone, hasn't it? The value's gone, so the trade's gone. So this value has to still be in place when the price breaks. If it's gone, then it's just fair value. That's why we call it, that's why we call it bid watch after it's broken. If it's not broken, we'll normally say something along the lines of, we'll be watching for the sweep. Following the sweep, the value might be gone. Following the sweep, the value might be there, in which case we're ready to maybe do a bit of business. Classroom in 10, guys.